I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. And we saw some of these outside markets get rocket boosters on them here today on news that Pfizer came out with a vaccine that's said to be 90% effective. We saw indices take a moonshot, crude oil a moonshot, and we were kind of looking for these grains to follow suit on the floor open, but really couldn't get that momentum. Soybeans held up well, but let's start by looking at the corn market. Corn finished the day slightly higher on the day, just up about a penny, better than where we were trading in the overnight for sure, but still a little bit disappointing with all the good news and crude oil trading up sharply. But I think a lot of this is probably on the back of market participants sitting on their hands ahead of tomorrow's USDA WASDE report, which will be out at 11 a.m. Central Time. And I think that could be an inflection point for the market. The path of least resistance, as you can see here, really since the bottom in August has been higher lows, higher highs, higher lows, higher highs. Now, recently, last week, we did make a lower high. And is that mean the top is in? No, but it does mean that the process may have started for posting at least a very near-term top. If the market can't get back above these highs that we saw last week, 417.25, I think we could start to see the enthusiasm die out. And with the funds holding a very large net long position, we could start to see some long liquidation if we get a bearish report or a fundamental rejection. A fundamental rejection would be get a bullish USDA report and no follow through to the upside. So those are a couple things that we're looking at. From the technical standpoint, we've got $4, obviously psychologically significant, but also technically significant. You can see that's right about where the trend line comes in. This is a little bit of a breakout point and a lot of interaction between buyers and sellers here over the last week and a half or so. So I think that's going to be the big barrier. Breaking close below $4, and we think that could really open the door for a run down towards this 385, which is a key retracement, old resistance, and the breakout point from about October 7th here. So that's going to be a big one to keep a close eye on. And we are running a call to close competition as well, before I forget. So if you can call the close for December corn tomorrow after the report, you get an opportunity to win this cool trophy / mug. And we're also doing the same for soybeans. January soybeans, call the close, win your trophy. And we'll send it out to you if you can nail the number. Now, speaking of soybeans, let's jump over to that chart and see what we're looking at here. Obviously, we're up above this $11 level, which is psychologically significant, and we've been talking a lot about this over the last couple of weeks. Well, where is technical resistance? Well, there is none, to be honest with you. You might see some analysts try to throw something out there, but it's rather meaningless and a bit of a fool's errand to be looking for technical resistance in uncharted territory. We don't have the interaction between buyers and sellers previously to go off of. So it's more for looking for failures, and $11 is going to be psychologically significant. If we break down below that, I think we could go probably retest this trend line here that goes all the way back from those August lows before we really started ramping to the upside. That trend line is going to come in right around that 1070 area. So if we break and close below $11 on a bearish number, or as with corn, a fundamental rejection, look for that 1070 level, and that's going to be the inflection point. Until we see consecutive closes below this trend line, the bulls do have the technical advantage. So if you're playing it to the short side, you're going to want to manage your risk appropriately and keep things rather tight going forward. Now, wrapping things up with the wheat market. The wheat market is starting to form a little bit of a head and shoulders, and this is something we talked about last week. We got this heck of a move here last week, and we rocketed all the way up into the mid 620s, rejected, closed near the lows of the day, and we really haven't been able to find ground going forward. So this is a little bit of a support pocket here in this 590 to 595 area. If we break and close below there is air underneath this market, and we could really see the long liquidation take this market closer towards that 550 level in the coming weeks. It's not going to happen all at once, but we are starting to see some bearish chart developments take place, but we want to see a little bit more confirmation. So as we've mentioned, we've got the support pocket here, and a trend line here comes in near 590. A break and close below there, I think, opens the door for a whoosh lower, so to speak. So that's what we're looking at going into tomorrow's USDA report. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures with your Tech Talk. Remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.